Hey YouTube, how is it going today? Well, the market looks like it is showing signs of breaking down, so I want to go over those charts and show you what I'm doing about it. And then, as always, afterwards, I'm going to show you some very nice looking tradable chart patterns to the upside, so make sure you stick around for that as well. Now, if you're new to my channel, I like to find short-term and long-term trading opportunities in typically lower-priced stocks. Not only will I talk about the featured stock in the video, but I also try to present at least a couple other nice-looking tradable opportunities that are happening currently in the market. So if that's something that interests you, please consider subscribing to the channel so you don't miss any future trading ideas. But please remember, I am not a financial advisor, so please do all of your own research before buying any of these stocks. All right, guys, I'm going to get right into the charts. I'm going to jump into the ETFs that follow the major market averages. I'm going to jump into the QQQ first, which, of course, follows the NASDAQ composite. And if we look at this chart right here, we can see that the market is rolling over. If I zoom in just a little bit, you can see we had that bullish hammer. I know it's a bullish hammer, but it's almost like a topping candle when the market has been moving up. Because if you go back, you know, we had a couple of them right here, and then we had a little bit of a reversal. And if we go back to September, we can see we had that bullish hammer right before the market rolled over, just like we're having right now. But if we zoom back in, we can see we had that huge day, that huge down day, just a couple of days later on much bigger than average volume. And then yesterday, it looked like we were going to have a strong day to the upside, but it sold off into the close and closed almost at the low of the day. And that is very bearish. When the market is starting to roll over, you tend to see that a lot. And then, of course, today we are having the follow through to the downside. The QQQs has already broken the 21-period simple or exponential moving average and is heading towards the 50-period simple moving average. So this is follow through to the downside. If you're new to my channel, I like to trade almost exclusively off this 8-period exponential moving average, but this is a faster type signal. But to the downside, this works even better than on the upside because fear is a stronger emotion than greed. So price tends to move faster to the downside. So I like using it in an up market, but I really like using it in a down market. And it is holding below this 8-period exponential moving average and starting to roll over. But let's take a look at the diamonds, which is the ETF of the Dow Jones Industrial Average. If I can get my software to work. There we go. We can see this one has already started to roll over, and it's been weak for several days. You know, this has been the weaker of all of the three averages of the Dow, of the S&P, and of the NASDAQ. And as we can see, this one has already broken below the 50-period simple moving average. So the diamonds, or the Dow, has already been starting to roll over. So this is a very bearish signal. And let's take a look at the spider real quick. And we can see basically the same story on the spider. We're getting follow through to the downside, and it is almost to the 50-period simple moving average already. So this is going to be a very pivotal point in the market, probably on Monday. If the S&P 500 can't hold this 50-period simple moving average and starts to break below it again, you know, this could end up being a pretty decent down move in the market. You know, hopefully we do get some maybe good news over the weekend that turns the market back around to the upside. But the way things are looking right now, as far as I'm concerned, I am going to buy some downside protection for my portfolio. I've actually been raising some cash for the last couple of weeks, so I have a decent amount of cash. I feel pretty comfortable. But I do still have some other positions out there, and I'm not really going to touch those, I don't think. But what I am going to do is buy some downside protection by trading these inverted ETFs. The first one I want to talk about is the QQQ, which is the ultra short of the NASDAQ. So this is going to move 3 times as fast as the NASDAQ does, but it's going to be inverted. So if the market goes down, this one goes up. But like I said, this is 3 times leverage, so this one is a little bit riskier. This one is really going to move, but if we get an accelerated move to the downside in the NASDAQ, this one has the potential to go up quite a ways. So this is the one that I'm looking at right now. As you can see, like when we had those down moves in September and in October, it had a pretty nice appreciation. Right now, it's just above the 8-period exponential moving average. You can see it's just starting to hold it and start the uptrend. Very nice looking pattern if you were trying to call a bottom. I mean, it's finding support at that 8-period exponential moving average and is starting to move up. So if the market does move down, this one is just starting its uptrend by the looks of this formation. But if you were to buy this after it broke through the 8-period exponential moving average back in September, you could have got it for right around 22 bucks, and it hit a high just a week or so later, right around $29. So about a 30% move, give or take, in just a couple of weeks, and you'd have got some downside protection for your portfolio as the market got weaker. But the next one I want to look at is the one for the Dow Jones, which is the DXD. It's the ProShares Ultra Short. And this one is also a 3 times levered Dow Jones short ETF. As we can see, this one looks like it is the strongest one of the inverted funds because the Dow is the weakest average of the averages. And this one is already starting to bust above the 50-period simple moving average, just like the Dow was already starting to break below it. But the DXD is also looking very bullish at this point. You know, it had the break above the 8-period exponential moving average, and then it broke below it, but it closed back above it. And that is a very nice reversal. But I mean, of course, this is just the opposite of what's going on in the averages. But the DXD is one that I am considering, and the next one that I want to look at was the SDS, and that is the double inverted fund for the S&P 500. So if you don't want one that's as leveraged as 3 times, this is only the 2 times leveraged ProShares Ultra Short for the S&P 500, and you can see that this is a super bullish looking formation right here. So this is like the time when you want to be getting into a trend that's starting. There's no guarantee that it's going to keep going, but you don't want to be like trying to call these little bottoms here, because this is just, you're fighting the trend. It's a straight up gamble. If you can wait until, like, if you think the market's getting weaker, but if you can wait till it breaks above that 8-period exponential moving average and show a little bit of follow through, you've increased your chances of a successful trade by quite a bit. You know, if we go back to just these other 2 times when the market broke down, when you could have made money on these inverted funds. You know, if you waited for them to jump above that 8-period exponential moving average and show a little bit of hold, then you can get that continued uptrend, you know. And just like we did back here in October, this wasn't a super long uptrend, but you could have made a little bit of money on that one as well. When you get these little fake outs like here, this is not when you want to be entering, because this is not a hold. This is not showing you that it's going to be following through to the upside on these. But I just wanted to show you guys these inverted ETFs. I plan on buying at least one of them before the market closes. What I want to see is the market continue through to the downside towards the close. If the market reverses and ends up, then, you know, this trade is completely off, because if it ends towards the high of the day, then there's less of a chance that we're going to get a rollover, so I'm not going to need that protection as of today. But those are my thoughts on the market, and this is how I'm going to be trading them. Let's get into some of those other tradable charts now. All right, guys, well, I'm going to go through these charts rather quickly. I don't want the video to drag on too long, but before I get started, I do want to say I am not going to be taking any of these positions if the market continues to follow through to the downside. I already have enough long side exposure. I'm only interested in these if the market does reverse and start to move higher. This video, I'm recording this in the middle of the day, so there's still several hours left, so it could easily reverse from here. But I did want to show you these in case the market did reverse. But the first one I want to show you is OXBR. And when I brought this one up for my list. It was trading near the highs of the day, so we can see it has already began to sell off just since I started the video. So the market is already starting to get weak. As far as some of these lower price stocks, it's already starting to drag these down as well. But OXBR does have a lot of accumulation going on in the bottom of the chart. And if we back out, we can see it has a very nice long base going back several years. So this is exactly what I like to see in a lower price stock that is has good potential to start moving higher. But the next one I want to show you is AIKI. And this is a very nice looking chart pattern as well. We got that accumulation on the bottom. It was climbing up the 8-period exponential moving average, but this one as well was near the highs of the day when I put it on my list for this video. So this one is selling off as well. So the market is continuing to be weak, but if the market does turn around, I would be very interested in this chart right here, or this company, because this is, if it can follow through to the upside, it looks very bullish. But unfortunately, this one is getting a little weak as well. I wonder if this is how they're all going to look. But let's go to the next one. DTEA. David's Tea Incorporated. This one is actually still relatively strong. It sold off just a little bit. It looks like it's tucked its head below the old high at the moment, or it's right there. But it was a little higher when I put it on the list. But we can see we had the accumulation volume from before, which was pushing this higher. And we jump to a 15-minute chart. We can see this very nice bullish flag that is moving, or is forming intraday. Actually, we probably want to call this a pennant and not a flag, but very bullish pattern, so it could easily break out to the upside. Let's go back to the daily chart real quick. But going back to the daily chart, we can see it's very bullish formation. It's actually in a bullish pennant breakout at the moment on the daily chart. So just a very nice looking chart. Hopefully the market can turn around and get strong so I can start buying some more of these bullish formations, because I enjoy trading an uptrend versus a downtrend, even though the downtrends tend to move a little bit faster. But last one I want to show you guys is VXRT. VXRT is having a very nice move to the upside. This one might be one that bucks the trend and just screams higher, because we've had a nice rounding bottom formation and has since broken past all these resistance areas, and it's moving up towards this old high right around $17. I wouldn't be a bit surprised if it reaches that in the next few days, especially if the market turns around and gets strong, because this is a very, very bullish pattern. You can see the momentum slowly starting to turn, the accumulation taking place. You can see all this accumulation on the bottom, and now it is moving into the trend acceleration phase. So VXRT still looks super good, but I personally would be a little weary about going long with the market rolling over like it is, because it tends to drag everything down. But VXRT is definitely worth keeping an eye on for your watch list.